If you caught my last PYTH video on August 21st when the price sat at just 12 cents, you'll remember I called that first take profit at 20 cents. Well, we've hit it, and the momentum is building. But what's next for PYTH? Today, we're diving into fresh updates from the Pyth Network, including their push into a $50 billion finance opportunity and record staking highs. Stick around as I break down the 3-day chart, showing that aggressive upside breakout and my new load zones for entries. Whether you're already in or eyeing a position, this could be your edge. Let's get into it. Let's start with where PYTH stands right now. In Phase 1, focused on DeFi domination, PYTH has built a decentralized source of truth for market data using blockchain tech. They're working with top institutions, even the U.S. Department of Commerce, to deliver price feeds that solve real market challenges. Think about it. Over 60% total trading volume in DeFi derivatives, plus more than 600 integrations across the ecosystem. Their stream-supplied chain pulls data from trusted sources like Binance, CBOE, Bloomberg, CME, Nasdaq, and many more. PYTH is positioning itself as the go-to for accurate, on-chain prices. And look at August's numbers. $1.8 billion in total traded volume, 70 million cross-chain updates, over $25 billion in value secured, and more than 7 million entropy requests. They've connected to over 107 blockchains, with 94% market coverage on Aptos, 95 on Sui, and 91 on Solana. Plus, 11 new integrations last month alone. In the news, Mike Cahill, PYTH contributor, got quoted in Bloomberg. They were selected for U.S. economic data on Coinbase. And Mike James, PYTH head of institutional business development, talked stocks in a feature. This foundation is solid, setting up big moves ahead. Now, shifting to Phase 2, which aims to disrupt finance's $50 billion opportunity. PYTH sees the industry still controlled by legacy players who fragment access to data. Even capturing 1% could mean $500 million in annual recurring revenue, feeding right into new token utility. The problem? Valuable prices get created upstream, but revenue leaks to middlemen downstream. PYTH Fix-It, a subscription model for pure market data beyond blockchain. This covers risk models, clearing and settlement, compliance workflows, accounting and reporting, display monitors, and historical research. It simplifies global market access and empowers institutions with specialized data. Beyond revenue, this proposal asks the DAO to back buybacks, rewards, and network strength for all stakeholders. PYTH is in the optimal spot for exponential growth as assets tokenize, but they're honest about the challenges, like opaque, inefficient markets. This could unlock real value, and the teaser video hints it's coming soon. Recent posts show PYTH momentum rolling. On September 10th, they announced LINEA, with its feed now live across over 100 blockchains. That's expanding reach fast. Then, staking hit new highs by September 11th. 950 million PYTH staked and 54 million in rewards distributed. Staking providers, builders, and publishers are fueling this growth in decentralized security. And on September 19th, proof of PYTH on Monad mainnet ARC. Faster chain means faster price feeds with deviation thresholds of 5 basis points or less. PYTH joins oracles like Chainlink, Redstone, Switchboard, and others in Oracle Overdrive on Monad. Looking to Phase 3, they're adding 200 to 300 new symbols monthly, aiming for 3,000 by year-end and over 10,000 in 2026. That's total market coverage across trading venues, OTC, permissioned and unpermissioned DeFi. PYTH chart shows them leading in symbol coverage against competitors like Coinbase, Binance, and others. They're creating the first market data network by and for institutions, from big firms to individual traders. I'm not sleeping on this. All right, let's spend some time on what you all love, the chart. This is the PYTH USD pair on a 3-day time frame, and things are looking up. I anchored the Fibonacci retracement from the December 2024 local top to the June lows. Levels show potential targets. First at 20 cents, which we hit since my last video, then 26 cents, 37, 55, 84 cents, and up to $1.30. Add percentage trims based on your risk as we climb. Notice those orange dashed trend lines. The long descending one started from the March 2024 top, got retested and rejected in December, and again end of August. But recently, price went up aggressively, also smashing the smaller December trend line that held retests in May and July. That upside move in late August flipped the super trend indicator from red to green. Use that green line as a dynamic stop loss. Below, the Heikin-Ashi RSI indicator is entering bullish territory, ticking up with a green candle after 2 reds. The visible range volume profile has the point of control at 14 cents, showing strong support there. Current price hovers around 17 cents. For entries, my green boxes are load zones. The first one accumulated nicely before the pump, and now I've set a second between 13 and 17 cents for cheaper buys if we dip. I'm already in 10 to 12 cents averages, with my stop loss trailed to 12 cents after hitting that first TP. If the weekly closes below the red dashed line, that's invalidation for this trade, but I'll hold my long-term bag because I believe in Pyth. Trailing stops as we hit profits. Simple risk management keeps us in the game. Wrapping the analysis, Pyth fundamentals scream long-term hold with these phases unlocking utility. Price could pull back to that second load zone for a better entry, but the breakout suggests more upside. Remember, this is my 10th Pyth video. Links to the mains in the description if you're new. If this helped map out Pyth Network's path, hit that like button and drop a comment. What's your target? Subscribe for more daily breakdowns like this. Watch my previous Pyth videos on screen now. They're packed with the setup that got us here. Thanks for joining. Never financial advice. Let's yield smart together.